on, I guess, the first stage of where we tried to kill an idea quickly, we obviously have our accounting and governance checklist, where we have an automated accounting health check. Aubrey, I know you spent a lot of time developing that.
Sure. So it really started with, before I joined, when I was thinking about how to short stocks. Because when I was at a hedge fund, obviously I had to short them. And one of the easiest ways I had found to spot ideas was to look at the accounting. If something is misrepresentative, it's not just the fact that the real earnings might be lower. It's the fact that why are the real earnings lower? Why are they hiding it? Because often they're hiding it because the business is doing something that is actually going the wrong way. So it's doubly dangerous for investors. So I looked at what are the signs of aggressive accounting, and they might be aging accounts, increased receivables, changes to the cash conversion cycle, inventory provisioning or M&A provisioning, looking at GAAP versus adjusted earnings, cash flow versus normal earnings, stock-based compensation, something we see with a lot of US tech companies, asset life. Another funny one is tax charged versus tax paid. So, often you have two tax numbers in the accounts. You have what you see in the income statement and what you see in the cash flow. What you see in the cash flow is what a company actually paid. On the income statement, it's what they've said they've paid. Now, sometimes you find out that actually the actual number is less than the reported number. And that's because they don't actually have as much profits to pay tax on. Not always, but all these things, they're not, nothing in and of itself is, we don't want to invest in this. It just all builds a picture. If three of them flash, well, that's three cockroaches and there are probably more. But we don't just stop there. We also look for other things. We look for related party transactions, change in auditors. To tell you a very quick story about auditors, there's one audio equipment supplier that I was looking at. They had an auditor who had been associated with a major accounting disaster previously. And I actually looked at some of the other companies that this auditor had been involved in, this individual had been involved in, and there were quite a lot of accounting issues, shall we say. So we avoided that company, and very good thing. Well, to begin with, it looked like that was a mistake, but actually, over 5 years, it was a good thing. And I think that one of the other things that we look at, which perhaps people don't always know about, is we use blackline. So we will compare the wording from one quarter to another, and this was the importance of this was really driven home to me when reading a blog written by Sam Antar. Now, Sam Antar was the CFO of Crazy Eddie's. This was a massive accounting fraud. He went to prison, and he's now reformed, and he helps people find accounting frauds. But one of the things he highlighted is that he changed one word in the back of the report. In the revenue recognition section, he changed that revenue is recognized when received to when earned. And the difference of when received to when earned meant that he was then able to fake a huge amount of revenue, because there is a difference between received and earned. You should never have a change in language for boilerplate language. It should be copy and paste from one year to the next. So if you're changing one word, you are doing it for a reason. So we really look at things like that. And, actually, one example that you caught was the asset life change of a chemical company.
I just find that I've participated either as an investor or often as a board member, audit committee member in so many audits, even our own audit. Every single time, I've never seen anyone do it differently. Every person starts with the Word document that they use to produce their report from the previous year. They do track changes in Word, and they start changing things. Everyone does it the same way. I've yet to see someone who starts from scratch. Why would you start from scratch, right?
No, of course.
And so when someone changes something, there's a reason why they're changing something. And it was a chemicals company that I was looking at, European chemicals company, and they changed the asset life. And the reason it caught my attention is that the change in asset life changed the depreciation for the year. But the change in the depreciation was exactly offsetting a reduction in margin. So
how convenient.
Yeah, how convenient. Yeah. So whatever, their profits went down by 20 million, and the change in depreciation added 20 million. So it's exactly the same, like to the penny. And I was like, there is no way that is a coincidence. Someone decided to change that, and I can't remember the exact wording that they did, but they changed it in a very kind of canny way, where they're, instead of just saying we would change the asset life from 6 to 5, they've changed it a little bit and added some things and made things shorter, but it still had, it made it look like a full review of their depreciation policy, and some things went longer, some things went shorter. But the end result is that was very convenient, exactly offsetting the number. And exactly, it was a stock that we owned at the time. So as a tangent, I don't know if I remember this, I was like, this doesn't look right. And maybe I was a nicer person when I was younger. I don't know. But I was like, let me pick up the phone and call the CFO and see if he has a good explanation for why this happened. And I pick up the phone and call the CFO, and I'm on the phone with him. And I was sitting at my desk, and I have Bloomberg open, so I have the portfolio open. And the stock kind of was up 2% on the day. And I'm on the phone with him, and he's trying to convince me why this has happened. And he was not making any sense. And kind of sitting there remembering, is it Jim Chanos who says that if something in the filing doesn't make sense, it's because they don't want you to understand it, or something like that? If the language is not English, basically, there's a reason they don't want you to.
If you can't understand it, it's probably because they don't want you
exactly,
to understand
that's what it is, yeah. The guy was making no sense. And then he said, and the market believes us, and look at our stock, it's up 5% on the day. And I wasn't looking at the ticker, and I turned, and sure enough, the stock was now up 5%. So the guy was on the phone with me, and he had the stock open. And I was like, it's one thing for a fund manager to have stock prices open on his screen, but for a CFO of an industrial company to have that, well...
That tells you something, right?
That tells you something.
What about you, Jack? Have you seen anything interesting or exciting?
Well, before we get on to some of the exciting ones, to your earlier discussion about the hyperscalers, right? This is something that we picked up, I think probably a year and a half, 2 years ago.
Yeah.
I know we'll talk about our quarterly earnings process later, but every quarter we do a black line of the latest 10Q versus the previous 10Q. And we picked up on a change in the useful life, to your point earlier, with the hyperscalers changing the useful lives of their servers and networking equipment, which added a fairly significant amount to their bottom line. And potentially, I guess our view is that that's probably not reflective of economic reality. But beside the point, this is not necessarily always about trying to find something that's an out-and-out fraud, but it's about finding companies where the quality of the earnings are deteriorating.
Yeah.
And that's where I think our automated health check is really useful, not just for finding the frauds, but also for finding these companies where the earnings aren't as good as they used to be. But yes, we have come across some really funny examples, not necessarily in the automated health check, but when we look at things like related party transactions, that's always...
Yeah.
It's a bit of fun. That's always the first thing I go to.
Just write a book.
Yeah. Well, actually, but before we get on to related party transactions, there was one diagnostics company I remember we looked at. And to your point about the accounts not making any sense, this company had level 3 fair value reporting. And I was looking through the way they actually do the accounting for these level 3 fair values. And the English literally did not make any sense to me. Like the syntax was completely off. And that's a company where I guess it's no surprise that we also found a lot of very weird related party transactions. Family members using related party security companies to guard family members' properties and so on. Another one I remember is a very large US retailer, which I won't name, which had a controlling family, and it was renting the controlling family's private jet at what we thought was well in excess of the market rate for that jet. And also, I think the chief executive was giving his brother-in-law a pretty large contract for some outdoor landscaping activities, which just sort of makes you feel that this really isn't a company that's being run in the interest of the minority shareholders. And of course, we are minority shareholders, or we're looking to be minority shareholders. So the way a company treats the small shareholders is what's really important to us.
Absolutely. And I remember a great one where there was a related party transaction of a trucking firm to something racing. And it then said for chauffeur services. And you sort of think, okay. But I actually did a little bit of digging into it and found out who, because it was a family member who owned this. The racing that it was involved in, though, not car racing, which would lend itself to chauffeur services, but horse racing.
Oh.
So I can't really imagine the CEO being sort of chauffeured on a horse.
It's still transportation, Aubrey.
Yeah.
Well, yes. Yeah. But yes, when, again, as Jack, as you say, if this is how they treat shareholders, what else are they doing? And what else are they prepared to do? There are so many examples where perhaps management take a company private at a lower price, or cash leaks. We want to partner with CEOs that have integrity. You'll know it, but what's Buffett's quote about integrity and smart CEOs?
Well, he says you want people who are intelligent, hardworking, and ethical. And they don't have the third one, then you definitely don't want them to have the first two.